Hello, my fearless family. How is everyone doing today? I had a really prosperous week, productive, got a lot of things done, had some more meetings moving forward, still looking for my commercial property. I'm going to continuously share with you guys my journey up until my opening day, and I will take you guys with me. If you're new to my channel, my name is Latasha. I talk about business credit, personal credit, business funding, and side hustles. um Again, I want to share with you guys, because if I can give you some advice to make things better or help you better on your journey, then I definitely want to do that. One of my mentors is Stormy Wellington, and I have a lot of them. I have signed under her for, numerous things. And I like what she say. I look at where everyone is going, and then I go the opposite way. And here's why you want to do that. Let's take some of these most recent opportunities like Airbnb. Some people literally went out and bought property so they can Airbnb it and become an Airbnb millionaire. You guys, most of the people that are teaching you these courses have not made $1 million in that industry. They know that people like you will pay for that course, especially if it's what, $50, $100, $200. And you'll get the information. Some will try to apply it. Others will just, I got through the course. It wasn't for me. At least you knew at just spending $100 that it wasn't for you. Okay. But some will actually go and invest and do what they say do in the content. And just to find out, there are horror stories. Even my daughter and I was talking about it. And yes, you guys, my daughter is my personal assistant at this point. So you're going to hear me talk about her, but maybe I should just use the phrase assistant so you'll know. And she was saying it's horror stories concerning, Airbnbs and how people tear property, and how the insurance don't cover it, because most insurance companies are not even equipped for these type of programs or apps or websites. Like now, when you get insurance, they ask you what you do ride sharing, because they know if you dash, you Uber, you do any type of delivery, that it's a more chance that you may be in an incident, and they have to set up your insurance accordingly. Let's take Toro for instance. People teach Toro classes. You can go to Ally. I did a video on it, how to get, finance a car in your business name. Just stroll down. I believe I did this video maybe 2 months ago. Some people will go out and finance BMWs, Audis, Range Rovers, like these very expensive vehicles. They will go out and finance them under their business name and then rent them. Imagine renting a house to someone and entrusting that they're going to bring it back to you safely. You know, just the stress alone with that business model is too much for me, because I was thinking, oh my goodness. And then Ally has gotten hip to the fact that people will purchase vehicles under their business name, then go and put them on, again, some type of ride sharing app, right? Our Toro, and rent this car out knowing that it's not even paid for. You haven't even made your first payment. You know, it's just not a good business model when you look at it from a practical standpoint. Okay. So that's the reason why I give you a little bit about myself, so you will know my journey and know that I always go at this point in my entrepreneur journey. I go the path that no one else is taking, based off the advice that my mentor has given me. Before going into anything, you guys, get a mentor. Try to get someone that has, made at least $1 million, that can tell you, I don't think that's a good idea. You have to understand why a lot of millionaires are not in certain industries. because they know they're risky, okay? So pay attention. Here's another business model: ATM machines. You guys, ATM machines charge about what, $4 to $5 for a fee, or it's based on how much you withdraw. Most people usually withdraw under $100 from ATMs because it's quick cash, right? So the fees associated with it is not worth the trouble. $5 or $6 profit for every transaction. First off, you have to find a location. Then you have to make sure that the machine is being serviced and filled. Like, it's not worth it for the profit margin. You could go over to eBay and sell something and make a $6 to $7 profit per transaction based off of what you're selling. E-commerce just makes sense. It's very rare when you're dealing with platforms like eBay, and I believe in Amazon. I just don't sell on Amazon because the profit margin is just not there for me. It's too many people selling on Amazon. So I really like eBay over Amazon if we're talking about selling, right? So you can go over to eBay and make the same amount of money as if you were doing an ATM business. Okay. So I want you guys to really, really think before going into business ventures. We're in a tax season. A lot of people are thinking of ways that they can make their money useful. It's like, okay, every year I get this money and usually I blow it. What can I do to make the money useful where I can see it in years to come? The title of the video is Rent versus Buying. I know I kind of went around in a circle, but if you're subscribed to my channel, you know that these are things that I talk about. I talk about side hustles. I talk about business opportunities. And now I want to talk about buying versus renting, which falls up under personal credit. I know you meet a lot of ambitious realtors. My mother retired from the state, and she now is a real estate agent, but she's retired, so she has an income. Okay. So this is just like a side situation for her. It doesn't feed her children because we're all grown. It doesn't pay her mortgage. Like, she don't need this. So be leery of people that's just desperate to get you to buy a home. The real estate agent don't care about your finances. They don't care about if you can afford this house. I used to work with a Rise, a warranty company, a home warranty company. And I remember a woman calling in and she said, I'm calling to get the status of my service request. And me being a homeowner, I know exactly how it feels to call in and need your appliances fixed, because you pay this bill every month and you expect for the problem to be, repaired. And I went over the notes and I told her, I said, well, your claim has been denied. And she was like, why? And I had to turn on my empathy hat because I empathize with her. I understand. AC units run brand new, they and plus installation, and if it's an old unit, they have to convert your home and get it prepared for the new units that they make now. Okay, so these are the things that you're gonna have to know going into home ownership. Okay, you guys, so you can't go into it thinking, oh, I just save by not having to pay rent. No, trust me. So in order to convert the old unit or get your house or home ready for the new unit, it's going to cost between $8,000 and $9,000. Now, if you have an Old Navy card, you can put that on your charge card and keep it moving. But now it's going to take you years to pay that off, especially if you never really had it. Okay. She broke down and cried. And I had to give her a minute, and I had to explain to her based off the notes the reason why we were not able to cover that unit is because it was pre-existing. She bought a home that the air conditioning did not work. And so I took my customer service hat off, and then I became like a friend just to ask a simple question. And I said, well, she said, I only been in the home for a month. I said, okay. So this problem came from the previous owners. And why won't they repair it? Because it's a pre-existing problem. And I said, well, did you get an inspection? And she said, no, I didn't. When you are buying a home, you guys, you have to inspect the property. And here's the thing. What if you spend the money to have a house inspected and it has too many problems and now you back out of the deal? So now every house that you go and look at and you go under contract, or you try to go under contract, because you always get an inspection before you go under contract, you find out something is wrong with the home. So you're throwing money there away, right? Or you can say, I'm just gonna take my risk it and get something. The roof need to be replaced. I bought an older home that was built in like the 80s, and 4 bedrooms, simple little house to raise my children in. Now paid for. I paid for it in record time, and I wanted to the first time home buyer. So if you have purchased a home before, you no longer qualify for that program. I don't know if it still exists. So I literally put nothing down, but I did have the 20% because going into buying a home, I was told that you would need to put 20% down. So instead of putting it down towards my down payment, I put down nothing. And then I took that 20% and I threw it towards the principal of my home. What happens is they lower the note, because their game plan is to have you under, under their, you know, umbrella for 30 years. I'm trying to be nice with my words. They want to have you in a chokehold for 30 years. They don't want you to pay off your mortgage sooner because it affects their profit margin. My interest was 4%, which I don't think those rates will ever exist again, or no time soon. We might get back down to 4%. So that's how I paid it off. I used to throw extra money towards the principal. I always made sure I paid the regular note and then I threw extra towards the principal. Now, 12, 13 years later, the house is double in profit, and I can pull equity out of it or sell it and make double what I paid for it. That is the only way it makes sense. If you buy a home that comes with equity. If it doesn't come with equity and you're getting a new bill, it's in a new area, most new homes has zero equity. You're actually going into the property losing money. When mortgage companies calculate your mortgage, they calculate that interest in your payment. They put your interest onto that mortgage at the time based off that percentage, and hopefully you get a fixed rate and not an ARM. They shouldn't even be issuing out ARM rates anyway. That's adjustable rate mortgage. Should no one be purchasing a home with adjustable rate mortgage. That's what happened in '08, and that's the reason why a lot of people lost their homes. But if all you have is rent money and you're living paycheck to paycheck, home ownership doesn't make sense to you. It don't. I don't care how high rent get. Having a 680, zero down, first time home buyer, and you're going in it with just your rent payment. So all you have is that rent that you're not going to pay. You have no savings, you have no emergency funds, then home ownership is not going to be for you. I know that paying rent seems like you're throwing your money towards nothing, but that's not the truth, you guys. Here's the only time a home is an asset and not a liability. If you're using the equity, so you're getting a HELOC, that's a home equity line of credit, and you're going to pull it out to invest in a business. So now your home became valuable. Or you sell it for more than what you paid for it. That's the only time a mortgage is going to make sense, a home. Because technically, a single family home is a liability, you guys. It is. It's going to cost you. I have literally replaced everything in my home because it was older. The furnace, AC, no, not the AC, not the AC, the furnace, the water heater, two new roofs, uh, pipes in the front yard because I had coverage, so I didn't have to pay a penny. But the pipes in the front yard, you have to have all these insurances and warranty and all this initial stuff. And here's another thing: if you think that your mortgage payment cannot increase, you're wrong because you have insurance. You also have your taxes. So taxes adjust every year based off your location, and if the value of where you are living go up, then taxes will as well. My taxes have tripled in my home, and I'm fine with that. um Also, if you file a claim on your insurance, like you when you first get your homeowner's insurance, it's going to be cheap because you never owned a home. You haven't filed any claims. But if you file a claim, the next time your insurance renew the next year, it could go up to 200 or 300 extra dollars. And now you're paying the mortgage plus the taxes, now your insurance. So it still can go up on you. So don't believe the hype. Again, I know that real estate agents are trying to sell you on this is the American dream. Don't you want to have a piece of America? Don't you want to own something? Don't you want to get something to call your own? Only if it makes sense financially. I would not go into a new development now. I would not. I would if I was to buy a home, it would have to come with equity. So and it need to show on paper what it appraised as and what they're selling it for. And right now, people are not selling their homes for under appraisal value. They're just not. And a lot of people are changing their minds and pulling their homes, the older homes with more character, off the market because they figure, why would I upgrade my home when I can stay where I am in a paid for home or close to paid for home and I could just remodel? So, yes, be careful out there purchasing a home. Now, if it was me and a realtor came to me and said, you should buy a home, I would say, okay, great. Do you sell commercial property? Because we can do business. We can do business. We're just not going to do it with me buying a single family home. It just don't make sense. Even Grant Cardone will tell you that purchasing he don't own a single family home. He literally live in his property. So he do owner occupied loans. And I will put a link here. I'll try to put it here or in the rest of this video, or you might see it anytime during this video, where you can go over and apply for a commercial property loan, and it is called an owner occupied loan. So let's just say you get a sixplex. You can live in one of those units. Now, if you have a bigger family, I totally understand that you don't want to put your family in a small home. But if you are young and younger and don't have any children, this is ideal for you. Or you're older and your children are grown and now you want to invest into real estate. Multifamily homes are the best place to sit because you can just stay in your property for 1 year and rent. Again, we're talking about a sixplex, and rent out the other 5 properties, and now you're pretty much living for free, and your 5 doors are paying for the mortgage. So if you are talking to real estate agents right now, that's what you want to talk to them about. Multifamily properties, not purchasing a home. It'll make more sense in the long run. Okay, so hopefully this video helped someone that is getting ready, geared up. You got your tax money. You tired of renting. You don't like your neighbors. If you don't like your neighbors, just move into another apartment and keep to yourself. That's how I get along with my neighbors. I keep to myself. I don't get in people's business. I don't speak. I don't wave because I don't want us to not like each other. I have moved many places, you guys. I have. And everywhere I go, I literally do not get to know my neighbors at all. I don't know their names, none of that good stuff. If mail get put in the wrong box, I just ease it, in their mailbox and let them know, hey, this was by accident. Like, I'm trying not to talk to people at all. So I totally understand when you're renting, you want to get into your own. But if you have the credit and you already are thinking about purchasing a property, I would think about purchasing commercial, multifamily, and staying in one of your units for a year, because that's part of the loan process. I believe you have to do. It's called an owner occupied loan, and make some money. That's what I would do. And again, that's based off where you are in your life. So again, hopefully this video was useful to you guys. I will see you next Sunday. Next Sunday, I'm going to talk about more personal credit, or let's do business funding, because that's what I'm currently working on right now, is funding for my business. And yeah. So until next time, you guys, I want you to stay fearless. Don't forget to like this video, subscribe if you're new to my channel, and I want you to have a blessed Sunday and stay fearless. Bye.